Hey traders, welcome to Charts and Coffee. Hope everyone is having a good morning. We've got some data that we are dealing with here first thing, and most of where I'm seeing this play out, quick move in gold. Now, what happens at 8:30 in the morning on Thursdays? We have our weekly jobless claims. So that's just a regular hot zone to deal with every Thursday. You'll see their unemployment claims. We do have Goolsby speaking at 9:35. We also have the Philly Fed manufacturing index. The unemployment claims is not usually a major market mover. The Philly Fed index missing just by a little bit seems to be causing probably the most issue intraday with gold. You can see here now, gold did punch up to a higher high, and you can see right there, that's a slight, and we didn't close up there, but we did punch up to a higher high. That's a new all-time high, by the way, pulling back on this data, but we'll see what happens after 9:30. The overall uptrend in gold has been really great, something we've been taking advantage of in the mastery. We just got in long calls again on the dip from Valentine's Day, and we're going to continue to manage gold miners. So that's been a great sector. That's been a great commodity to continue to track. And let's go see what's happening with the S&P and the NAS. You know, I wonder what all the clickbait, bears are going to say after the S&P hit another all-time high. Gang, all-time highs are never bearish. Corrections are not crashes. And remember, anything out there, and this has been for the better part of 2 years, and I rail against this because it's constant. If someone wakes up in the morning and says, gosh, I feel like I'm not getting enough attention, you know what they do? They write a bearish piece because it gets attention. It grabs that little fear part of our brain, says, oh my gosh, maybe something terrible is going to happen, right? And that's exactly what has been happening on and off for probably the better part of, I don't know, how many all-time highs now later in the S&P and the NAS? Now, granted, this is still kind of choppy, but nonetheless, here we are flirting with all-time highs again. We closed that just the other day. I'll look at the S&P futures for this, but obviously SPY, SPX will all track the same way, right? And so one of the things that we try to remember as we're traders in the Sector Secrets Mastery, and as I write any bit of analysis, even our time here in Charts and Coffee, gang, bulls make money. Optimists, let's be a little bit more general. Optimists make money. I've never read a rich pessimist in my life. Bears like to be on television. There's a big difference. You want attention? Write a bearish piece. All right. Now, I say this because the long side is still the side that's working. There are better trends out there, by the way, than in the broader averages. I mentioned gold and gold miners. Financials are another place that I would keep an eye on to the long side. Another place that I would also keep an eye on to the long side, and it's doing a pretty darn good job, is why on earth on a series of green candles would I want to be bearish or buying puts? I don't, right? So this is where just on, you can see there the 18th, we punched up through what I like to call the equator. So basic materials has been on our watch list to the long side since the 28th. And frankly, long positions are going to do better than short positions in a green candle environment. However, just day before yesterday, we finally punched up through the equator. So basic materials, XLB, is going to be on that watch list in a far more clearer way now that it's done the thing that I would expect it to do, continue to be bullish. But breaking through that threshold is going to be a big deal. And it's kind of like a machete through the forest. We've broken an important threshold, and now the path is a little bit clearer. So buy the dip on XLB. It's been the case valid since the 27th of January, and now I like this even better. But I mean, take a look at the most recent move to the downside on the 12th. That's a buy the dip. green candle in the gray zone. So let's continue to keep an eye on XLB. Another place that I've been looking at is XLI. There are some really good names in XLI that have terrific trends, GE and Uber being just two of them. I wouldn't necessarily go with the sectors unless there's liquidity and unless it's the best look at that group. And we get into how to look at sectors specifically to build watch lists, to understand, is it better to be in the ETF or is it better to be in the stock? In the case of XLI, I would prefer to be in an individual stock versus the XLI. It is bullish. Look at the string of green candles. By the way, gang, if you take a look at the colors, these are not traditional Japanese candlesticks. These are top tier candles. Red is green. The red is bearish. Green is bullish, and this yellowish color, mustard, is neutral. And if I see at least 5 green candles in a row, I can't buy puts. Right? Think about anything you do. If you're having a difficult time growing your account, think about anything you do as removing, right? Well, the first thing I tell traders who are struggling, if you said, hey, how many trades did you put on last month or last week, whatever the number is, I say, cut it in half, right? It makes you choose from the best of the best. The other thing I would recommend is when we're going through any process of decision, rather than trying to figure out what to do, just figure out what not to do and eliminate that from the choices. And that's one really great thing about the top tier candles. If I'm looking at 5 green candles in a row, that eliminates the long put side. That eliminates the short side of the conversation and puts me firmly in, how do I set up a long call? How do I get long in the symbol? All right. So that's another thing to keep in mind in terms of the way in which that thinking process and trading can be better. More traders want more to do. Any old reason's good enough to get in, right? As opposed to what I've observed the greats do. And I've had the privilege of watching some folks that would be considered legends in trading, and they're always looking for a reason not to take the trade. You want to find a losing trader? They're looking for any old reason to take the trade. I'm always looking for a reason to not take the trade, right? So think about that if you're struggling with your account growth. All right, speaking of commodities, let's take a look at a few more. Copper definitely needs to be on the watch list. If you haven't been watching metals and mining, XME, copper, get them on the watch list. Again, these are not about Mag 7. My gosh, do we need another conversation about Mag 7 or Awesome 8 or whatever other names are given these stocks? No, there's actually things that are on the move, and they're not necessarily tech. So if we can remember that our watch list has to be fluid in uptrends, find the uptrends first, and fluid in that I don't care what's trending as long as it's liquid. That's what I'll trade, right? I'm not going to say, hey, what's my favorite stock doing today, right? There's no such thing. My favorite stock is whatever's trending, and the more the merrier. And by the way, if you really think about the 20th here, let's be fair with ourselves. If you're thinking, Rog, this year has not kind of started off the way I would like, we're 2 months in. Not really. The 4-year election cycle tends to sort of be in wait and see mode until after the inauguration and after we see some initial shifts from whatever the incoming administration is. That's just a 4-year cycle, right? So if you think about where we are, we're really 1 month into the year. So be fair with yourself. Don't look at it as 2 months in. We're really not. We've only just got about a month under our belt. And a month in, we're starting to see traders and investors are understanding the landscape. They're seeing what's moving, what's not moving, where the news has been landing. The tariff tantrums have been far fewer. In fact, the more likely scenario with any kind of tariff tantrum isn't that we're going to see tariffs being placed on any country or reciprocal tariffs. It's been the delay of tariffs. It's been the negotiation. And that sends the equity markets higher. And so now we've got 4 weeks of seeing how things are moving. And the wonderful thing is more and more trends are emerging. So we're really just 1 month into the year. So keep an eye on this. Another thing I would say is natural gas. Right? Keep an eye on Natty. It just woke up a little bit, sudden move. Look, I don't care about 2 candles like this, but if it can continue to trade above this previous high that we put in the middle of January, that might be something to keep an eye on. And then there are two sectors that'll tag along with that, the FCG and the XOP. So again, you'll notice we're not looking where everyone else is looking. If you're struggling with your trading, stop doing what everyone else is doing, right? Ask yourself two things. Am I focusing on trends? Am I waiting for a pullback? Those two processes, they work. They often, I know buy the dip sort of turns into this meme that people sort of make fun of, but at the end of the day, that's my bread and butter. Find a trend, buy the dip, rinse and repeat. And rather than, hey, something's about to break out, rather than presuming something's about to happen. I mean, Newton told us a body not in motion tends to stay not in motion, right? If it's stagnant, that is the likely probability for the future until an external catalyst hits it. But a body in motion tends to stay in motion. I would just use some physics in our trading and stick with those probabilities. All right, I did want to mention a few things about sector rotations. I don't know that it's much rotation. I wrote that down. It really just is sector strength. If we look at this month, which is 20 days in, gold miners, communication software, staples, healthcare. Staples are probably where we're seeing a little bit more rotation into because there is a lot of uncertainty. I know we just hit an all-time high, but there's still uncertainty, especially macroeconomically, where, look, gang, I watched a bunch of wide-eyed CNBC analysts. Yeah, I'm just calling it out because that just happened to be what I was watching. I tend to watch them, so I'm going to give them credit, and now I'm going to make fun of them. They were talking as if they discovered the other side of the moon because, the Fed's not going to cut. It's going to be a prolonged pause. No kidding. All right. Anybody, and especially you've been watching Charts and Coffee, this has been well projected. My gosh, heaven forbid those folks ever teach anybody anything, right? This has been well projected on the Fed fund futures. Free takes 2 seconds, and I don't have to listen to some guys wax poetic about the pause that was known for what, weeks, if not the better part of a month. We're not looking at cuts until maybe summer, and that's been the case since December or definitely January of this year. So be careful what you're listening to. It boggles the mind what parades around as information. So follow the data, trade what you see, not what you think. And yeah, gang, are we still expecting 1 to 2 rate cuts? Yeah, that's still priced in. At least 1, maybe 2. All right. So be careful what you're listening to on television. They're just there to grab your attention. All right. And I saw that yesterday. I was like, my gosh. But if there is a prolonged pause, it's obviously going to play out a little bit better for defensives. And you can see that in the data with utilities and staples. Both those are moving pretty well in terms of not necessarily great uptrends, but you're definitely seeing flows. You're definitely seeing higher highs. We're definitely seeing bullish participation. So those are things that I'm watching as well. Yeah, as far as X and the XME, yeah, there are a number of things in the XME that are looking good, Jess, and I would say X would be, one of them. Do I like it as much as some other names within XME or even GDX? Probably not. But yeah, it's definitely worth keeping an eye on some of these names. The challenge with X is the X narrative is still attached so much to the ongoing discussion about their, what is it that Nikkei, whatever that is, Nikkei Steel or whatever that was. I've been listening, but not really. I would say no on X, ATI, or CRS. If I'm looking at XME names, STLD, NUE. So I would say no. What are my thoughts? There are other better stocks in that group. And then the narrative around that's really around the company buyout or whatever is happening there. Look, I pay attention to the news only so much as I know it's getting a higher amount of attention. But at some point, I don't want to get bogged down and go down the rabbit hole of all the nuance. But keep in mind, X no longer really has the best trend. For a while it did. It's really kind of wobbling. And we know there are other narratives that are affecting it. So I'd leave it alone for now. There are other better names. Let's see. Tesla still going long. Alan, was that a question or a comment? Either way, am I going to be buying Tesla? No, I won't. It's been a bad idea as a probability setup, high probability since the 31st of January. It's been a hard no in terms of top tier to be bullish in Tesla since the 31st. So, all right. Next up is, let's see, any other questions here? So XME, not looking long in Tesla. No, and look, let me elaborate why. Really simple. Most of what I want to do at this stage of my trading career, 30 years in, is quit gravitating. But the only folks that are getting long Tesla are the folks that this is their favorite stock. And that's okay. I mean, it's not something that I would do, but and I'll tell you why. Okay, 1, 2, 3, 4, 5, right there. That's it. No more long calls. In fact, the first time I see one red top tier candle, I'm going to stop buying calls. If you were to look at all the, let's go to end of January to current, middle of February, what's the high probability setup? Long or short? Or long calls or long puts? Long puts. And as long as the red candles are dominating, I don't hate my money, right? I'm not going to hope that Tesla's going to break out. I'm not going to hope that it's finally going to find higher highs. Now, let me show you a different transition in terms of red to yellow to potentially green. I would avoid Apple too. It's generally a bad place to focus on where there's still a lot of confusion. There's the red, no go to the long side. The green, no go to the short side, or no long puts now. And again, everyone's got their own strategy, and I'm looking at the daily time frame as well. So whatever it is we're looking at, the time frame dictates the time horizon. The daily time frame is the most psychologically relevant. It's the opinion of the stock that the widest group of people hold. And yeah, Apple's probably shifted bullishly compared to just where it was a week ago, but that's not a trend, right? We know where the trends are. Yeah. We know where the trends are, and they're not in those magnificents. Meta, great trend. I know it's been a little volatile, but that's been a really good trend. There's a lot of great trends in financials. We look at some of the trends in metals and mining. So that's what I'm looking for, gang. Again, everyone's got their own style. Everyone's got their own reason, but the reason we do charts and coffee is so I can be transparent about my process. All right. Next up is, let's see here. I like the look of Wells. Buy a dip. Yeah, Luch and Jackpot, good looking trend, buy a dip. Be aware of where the earnings, the 11th. Yeah, just be aware of the possibility of the next thing you're going to be dealing with isn't until the end of April. That's earnings. So yeah, I would just buy a dip. Focus on where we're going to pull back at least, I would say 50% on the last major move, and then go from there. Yeah. All right. Absolutely. And by the way, just to kind of go back on different time frames, let me just show you all here. Time frames matter, gang. A lot of times when traders disagree, and I see this on Twitter all the time, it's the difference in time frames. And this is where, when we use our words and say, hey, look, this is where, and this is something I mentioned in the mastery a lot. When we are going to talk about any symbol, there's really 4 symbols for me in one symbol. We could have a 5-minute trading discussion. That could be a day trade. We could have a 1-hour trading discussion. That's going to be a short-term swing. We could have a daily time frame trading discussion. That's going to be a swing trade anywhere from 2 to 10 days to maybe 21, again, based on expiration. And we could have a weekly time frame discussion. So whether it was the aforementioned Apple, the time frames matter. And that's why I encourage everyone. I see in a lot of discussions, people ask about symbols like you're calling in your favorite song to the radio station. I know I'm totally dating myself, but the best way to think about any setup is to be, hey, Rag, I'm looking at Apple. What do you see on the weekly time frame, right? Because each one of these are going to present different opportunities. Apple on the weekly is gorgeous, right? That's probably the best trend going, and the mean reversion triggered back at the end of January. That's a great trend. The daily, not so much. So if I say I don't like Apple, or avoid, like I was just talking about Tesla as well, the time frames matter. Let's normalize 2 things. not, hey, what do you think of this? I get it, but how about adding that extra layer of, Rog, I'm a short-term trader. Great. Now we can have a really powerful and effective discussion about a 5-minute or a 1-hour chart, right? Rog, I'm looking at this longer term. Is Tesla in a gorgeous trend overall long term? Oh gosh, yeah, right? I wouldn't touch the daily, right? But if you say, hey, Rog, I'm looking at the weekly, right? And that's a whole different conversation. So it's as important to understand the symbol we're looking at as it is the time frame. And if this is something that's a hole in your game right now, pick a time frame for each strategy. And I have 4 strategies I think about. Well, really 3. Day trading, short-term swing trading, long-term swing trading, which is really just swing trading, and then my position trades, which are usually 6 months or greater. So once we are communicating in that way, you're going to find that any kind of analysis you do or any analysis that I do here in the Mastery is going to just be so much more helpful. So thank you as always for being here for Charts and Coffee. I ran over a little bit. I will see you all tomorrow, same time, same station.